Using a big lot size on a small account is a no-no. Hey guys, welcome to Little Panda Forex. So in today's video, I'm going to show you a technique that is very simple that anyone can use to grow their small Forex account into a big account. It's very simple, so let's get started. How to grow your small account in Forex the right way. The key part is being the right way, because there's a lot of videos on YouTube that teach you a lot of stuff, but a lot of them don't work. And one of the reasons why people lose a lot of money in trading is because they use big lot size in a small account, and that's basically gambling. You might as well go to the casino. Using a big lot size on a small account is a no-no, and it's one of the biggest mistakes you can make in trading. And even if you're watching my video, even if you're a subscriber of me or a follower of me, still always back test anything you see online. Don't follow someone blindly, okay? Very important stuff. So the first thing is you're gonna trade less and you're gonna be more selective. By trading less and being selective, you're gonna basically get rid of overtrading. Overtrading is one of the biggest reasons why new traders lose a lot of money, and this basically means you're entering too many trades and you're not thinking properly. Because realistically, if you're looking at the charts and you're following 2-3 pairs, you might get maybe 2-3 good high probable setups within the week. But if you're entering like 10 trades in a day, then obviously there's something wrong. Point number 2, use good risk to reward ratio. This is basically how much you're putting at risk and how much you want to get at reward, okay? And the best way to explain this is, let me use some examples. So example number 1 is a 1-to-1 risk to reward ratio. It means whatever you're risking, when it gets 1 times that, you close your trade. So let's say you win the first trade, that's 1% gain, assuming you risk 1%. And if you lose the next trade, that's minus 1%. The result, you're at break even. So this is not a good way to go unless you're scalping and you have a very high win rate. Example number 2 is a bit better because it's using a 1-to-3 risk to reward ratio. So if you're risking, let's say $100, when it gets 3 times that, which is $300, you would get out. So if you win the first trade, that's 3% gain. And if you lose the next trade, that's minus 1%. Overall, you earn plus 2%. So as you can see, you have to lose 3 trades in a row to come to break even. So this is an ideal and a very optimal risk to reward ratio that you can use. And you can use more, bigger. Sometimes I use 1-to-20, but that setup doesn't happen every time, maybe once a month. So yeah, a 1-to-3 is a good starting point. Number 3, monitor your trade. This is basically when you're adjusting your stop loss. So when the market is going in your way, instead of just waiting at stop loss or even break even, maybe move your trade into a floating profit by trailing your stop loss. So if it has some sort of structure and it breaks, then put under that structure. And then if it makes more structure and it breaks again, then put it, just following it, trailing your stop loss. This is what it's called, okay? Now, let's come to the most important part, which you've all been waiting, the actual strategy to grow your small Forex account. So what we're gonna do is combine price action, so reading structure, in addition to just one indicator. This will give you a stronger confirmation. So add onto your chart the 50 EMA indicator. 2, mark spelling mistake there. Mark key daily zones, okay? Number 3, wait for break of structure on 1 hour time frame. Number 4, after price retest the 50 EMA, look for setups, okay? Still, we're not entering, we're looking for setups at this point. Before that, we don't care. Number 5, entry to be made on the 30-minute time frame to give you the best RR, risk to reward ratio. Number 6, you're gonna target the daily zones. And number 7, you can trail your stop loss to guarantee profits. Now, let's go onto the charts and apply this. So I added the 50 EMA. The settings you need to have is 50 length at this section smoothing. Now you just leave it at default and click OK. So let's go through a good simple example, and then I'll give you a more difficult example. You need to add the 50 EMA, which we've done. You need to mark your daily zones. Okay, let's go to the daily time frame and let's mark areas where price can potentially go. So I'm gonna mark this area. So this is basically the previous resistance that price broke. So we're gonna mark this. Or if you want to talk about smart money, we have an imbalance sitting here, and this is a nice order block. So yeah, it depends what you want to do, and it doesn't really matter. And here we can mark the wicks. You can also mark this area, but price is here, so I don't want to mark it. So wait for a break of structure on the 1 hour time frame, which we had here. So we had structure here, price broke it over here. Okay, now what we are waiting for is price to retest this 50 EMA for us to look for potential setups. So after price retests 50 EMA, look for setups. Okay, so all of this we do nothing. It's just a matter here. Price hasn't really touched the EMA, so if you look at it, it hasn't touched it, so it doesn't count. Okay, and what this is basically trapping the early buyers. Okay, people that are not patient enough, and then before the actual move. Still, price hasn't tested the EMA. It has to actually touch. Here we touched it and we closed back above it. Okay, this is the retest of the EMA I was talking about. We need to look on the 30-minute time frame and to look for entry. So let's go on the 30-minute time frame. As you can see, price is trading below the 50 EMA. What we need is price to close above the EMA. All of this we don't care. Now we had a nice close, so what you'll do, you would enter at this close of this candle, put your stop loss under this wick. Okay, go back to the 1 hour, and we are going to target this area here. So this is going to give you about 7.12 R. Okay, and now we do nothing. Once price breaks above this area, stop loss to break even. Okay, if you go into trade, see it came and touched it again, it hasn't really broken above it, so now stop loss to break even, and you wait for your take profit then. Very simple. Now let's look at a more complicated example. So what we can see, again, price broke above structure on the 1 hour. Now we are waiting for a retest. So what happened? Price closed under the 50 EMA. It doesn't mean that the price action is invalidated. It just means that we have to wait a bit longer. Now we closed back in, so it was a more deeper pullback to that area. Go into the 30 minutes. Again, price is trading about below. If price is already trading above it, then the setup is not longer valid, so I wouldn't really look for it. What happened? We closed above it straight away. So what you would do, you would enter here, stop loss just underneath this area, go back to the 1 hour, and again you would target what area? The same area that we previously did. We go to the daily, so around this zone here. Okay, if you want to target another zone, it's entirely up to you. Okay, there's no right or wrong lessons. Okay, so let's go into the 30 minutes so you can see it better. Came deeper in, no problem, still good. Wait for price to break above this area. Now we broke above that area. This is going to give you about 16 RR. Came back, still in the trade. We haven't been invalidated, and there we have a nice winner. And the reason this works is because you're basically going with the trend. As you can see, the trend is just making a high, higher low, a high, a higher low, a high, a higher low, a high, a higher low. So high highs and higher lows, and you're essentially using this EMA to your advantage, which the EMA is basically acting as a dynamic support zone. So you're going to enter at the high lows for potential buys. So yeah, very simple, it works. Backtest it, and this is how you're going to grow your small Forex account into a big account using high risk to reward ratios. Okay, good luck everyone, and let me know how your test results go if you're going to backtest it. Peace.